The Vanguard FTSE Pacific ETF, VPL, is an exchange-traded fund that provides exposure to the performance of the Pacific region, including Japan, Australia, and New Zealand. VPL tracks the performance of the FTSE Developed Asia Pacific All-Cap Index, which is a market capitalization-weighted index designed to measure the performance of the broad Asia Pacific equity market. The index includes large, mid, and small-cap companies from countries in the Pacific region, providing a diversified investment opportunity. One of the key benefits of investing in VPL is diversification. The ETF gives investors exposure to a range of different companies and industries across the Pacific region, reducing the risk associated with investing in a single company or sector. This helps to smooth out the ups and downs of any individual stock, reducing volatility and providing a more stable return over the long term. Another advantage of VPL is its low cost. Vanguard is well known for offering low-cost ETFs, and VPL is no exception. The ETF has an expense ratio of just 0.09%, which is significantly lower than the average expense ratio of actively managed mutual funds. This means that investors can keep more of their returns, rather than paying high fees to fund managers. VPL also offers tax efficiency, as ETFs are generally more tax efficient than mutual funds. This is because ETFs are structured in a way that allows for in-kind redemptions, meaning that shares are exchanged for the underlying assets, rather than being sold for cash. This reduces the amount of taxable capital gains and helps to minimize the impact of taxes on investment returns. In terms of the performance of VPL, the ETF has provided solid returns for investors over the long term. Since its inception in 2007, VPL has outperformed the MSCI Pacific Index, providing an average annual return of 11.67% compared to 9.81% for the benchmark. However, it's important to keep in mind that past performance is not a guarantee of future results, and there will always be some level of risk associated with investing in the stock market. The Asia-Pacific region is subject to a range of economic, political, and market-related risks, including currency fluctuations, changes in interest rates, and natural disasters. Despite these risks, VPL remains an attractive investment opportunity for those looking to gain exposure to the Pacific region. The ETF offers a diversified, low-cost, and tax-efficient way to invest in a range of companies across the Pacific, helping to reduce the risk associated with investing in individual stocks. In conclusion, the Vanguard FTSE Pacific ETF, VPL, is a well-diversified and low-cost ETF that provides exposure to the performance of the Pacific region, including Japan, Australia, and New Zealand. With its solid historical performance and tax-efficient structure, VPL is an attractive investment opportunity for those looking to gain exposure to the Asia-Pacific equity market.